In this video, how to trade Fibonacci retracements and extensions. And the first thing that you need to know is that it is based upon a mathematical sequence discovered in the 12th century by Leonardo Fibonacci. And basically, it is a scenario that looks something like this. You have coinciding numbers where you add the first two, you get the answer to the third one. You add the second and third one, you get the fourth. So it's this plus this equals this, this plus this equals this, this plus this equals this. And without going into deep mathematical conversations, they are all based upon 61.8% or 0.618 is the golden ratio, and there are nautilus, rivers, mountains, peaks, everything that you can think of seems to have this number involved in it as far as measuring it. Now, you can study as much as you want about Fibonacci, but know that as far as finance is concerned, it is something that is widely followed. The idea is that there should be some type of action around a Fibonacci retracement level and or an extension level, and traders look for setups at these areas. Now, there are a lot of debates out there as to whether or not there's any efficacy to this, and the reality is that there are enough people to believe in it that there is something to it. Whether or not there's any mathematical nature to it in markets, that's completely up for debate. The idea is with a retracement that you take a swing low and a swing high, and when it pulls back, you expect it to be at one of these ratios. For example, this might be 61.8% on this, and then you buy. So let's take a look at it in real life. Let's see really how we could have looked at this. So we are looking for swing lows and swing highs. It works in both directions. Again, though, it is somewhat subjective because you have to have everybody agree on what the swing low and the swing high is. You can see this is the Fibonacci retracement tool. So this was a swing low. This was a swing low. So let's take this one and drag it up to the swing high, and then you look, and you can see the price basically went down to the 61.8% Fibonacci retracement level. The catch with Fibonacci, though, is it really can't be used by itself. There are some people that simply buy a 50% pullback, which ironically actually isn't a Fibonacci number. It's just that for years, traders have always bought the 50% pullback, so they include it in the tool. It should also be noted that there are multitude of other numbers that you can have. I only have the important ones, the 50, the 61.8, the 38.2%. There are other ones like the 78.6, etc., etc. But really, those aren't used anywhere near as much. It's these three levels, 38.2, 61.8, and the 50%, that tend to attract the most attention. So you can see that we have a swing low, swing high. We pulled back to just about the 61.8. And in fact, we closed above the 50. So you could say that offered support, I suppose. Here's the thing, though. The reason this works isn't necessarily just because of that. There was obvious resistance there previously, so you can make an argument, did Fib work, or was it the previous resistance that's now acting as support? The reality is this is a good setup because it's a hammer, which is a very bullish candlestick, and you'll learn about those later, right at the 50% Fibonacci retracement level and the previous resistance level. So you can make an argument either way. That being said, that is one way that you can look at it. What's the difference between Fibonacci and horizontal support and resistance? the reality is you better hope there's none, because you need one or the other. You can see that the 61.8 held on this bounce back, just to show you that it does cause some attention in both directions. You can see that we had fallen, bounced right up to the 38.2 before going lower in the euro yen. Again, though, you can't just pick a level and say, okay, I'm going to start buying or selling there. There's a cluster here, there's a shooting star here, bearish candlestick, and you short it. Again, that's something that you'll learn in the candlestick section, but this all kind of ties together nicely. And even, a big hot mess like Uber, which has been all over the place, you can start to see some semblance of pattern here. You can see right around the 50% Fibonacci retracement level of this big move lower, we did, in fact, see some resistance. Fibonacci is also used for the extension tool, and it's in the same menu. You just choose trend-based Fib extension. So if you remember, this Monero one, the original one, went from there to there. So you click on both of those levels, and then you pull back to the beginning. And what you get is the 50% Fib retrace. But notice that beyond the highs, there is the 100%, and then there's a 1.61 extension. And that is an area that a lot of people will aim for. Again, though, I would draw your attention up here. Makes sense that there would be a little bit of profit taking in that region. The higher you go up the chain, though, the less likely it is to hit. So like the 2.618 level is a very long-term type of move. And to be honest with you, if you're day trading, you're very rarely going to hit 161. But it is something to look at if you're already involved in this move. So say you're here and you've seen a pullback at a nice move. You want to know where the market may be able to go. You can go back to the last swing low and use it. So it's a way to enter kind of late, actually. Fibonacci is not something that you can ignore, because it is something that catches the attention of so many traders. But like I said, you have to kind of take it for what it is. It's just a guideline to where things could happen. You could very easily say, well, swing high to swing low, and look, we're right here at the 50% Fibonacci retracement level in Ripple. But what would be even more impressive is if we were at an area that had been resistance and possibly even support in the past. There's a gap there. Resistance, 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 and resistance. And the 50% Fibonacci retracement level with a very bearish candlestick and an overextended move. You could probably put on other indicators that we'll be looking at in the next few videos to give you yet another reason to short Ripple at that level. So again, don't get too hung up on Fibonacci, but do realize that it gives you an opportunity to look for places where people are going to be trading. And that's really all it is. In the next video, we'll take a look at how to trade exponential moving averages.